Welcome, everybody, to another episode of the Startup Junkies podcast. We're excited to have you join us, listening in, watching, or however you're consuming your podcast media. We appreciate you. My name is Caleb. I'm the Director of Marketing and Events at Startup Junkie. I'm joined by my colleagues, Jeff Amerine and Matthew Ward. How are you all doing this afternoon?
Glad to be here. We're excited about this conversation today.
Likewise, I'm excited to have with us Darrin Williams and Vance Smiley. Darrin, Darrin is the CEO of Southern Bancorp. Prior to leading Southern, Darrin, he served as the managing partner of the law firm Carney Williams Bates Pulliam and Bowman. It's a mouthful. Where he focused on representing institutional investors and consumers in class action litigation. He also served 3 terms of elective office in the Arkansas House of Representatives, serving as Speaker Pro Tem in the 89th General Assembly. And we also have with us Vance Smiley. He's worked in the financial technology industry for about 20 years. In his new venture, BankWorx, he's partnering with Southern Bancorp and seeks to reimagine and reinvent the way banks use and develop core banking systems. The very industry his father helped launch. But before I even go into any more of that, I would like to welcome y'all. Thank you for joining us.
Hey, thank you for having us.
Absolutely. So I guess start off for those of you that are listening that don't know what Southern Bancorp is, would love to hear from y'all, just kind of an explanation of how that came to be.
Sure, I'll jump in here because when you get to financial technology, I'll be quiet and let Vance do all the talking. So Southern Bancorp, we are what's called a community development financial institution, or a CDFI, which you hear quite often now. And as a CDFI, 60% of our activity it takes place in low and moderate income census tracts. And so we were founded back in the mid-1980s, back when Bill Clinton was governor of Arkansas, looking for a way to stimulate economic activity, first in the Arkansas Delta region of the United States. And so then Governor Clinton came across, with the help of a number of other folks, a bank operating on the south side of Chicago called South Shore Bank, which is probably the first development bank in the country. This is a bank that was intentionally located on the south side of Chicago, an economically depressed, predominantly African-American urban area that had suffered from redlining and lack of investment. And so the founders of that organization intentionally focused on making investments in that community. And what they saw over time is that the community began to create economic opportunity, housing starts, job starts, small business startups, all that kind of increased. And so based on that model, Governor Clinton invited the folks from Chicago to Arkansas, along with the Walton Family Foundation, Rockefeller Foundation, Vance's father, Walter Smiley, one of the first board members, also Mac McClarty, other business leaders and titans in Arkansas all came together and started Southern Development Bank Corporation back in the mid-1980s with about $12 million in assets, and they used those dollars to acquire Elkhorn Bank, a bank that has a charter that dated back to the 1880s in Arkadelphia. And eventually, while that wasn't in the Delta, eventually they moved to the Delta. Today, we're proudly about about 1.7 billion in assets. We will soon close a merger with Arkansas County Bank, and we're acquiring that bank, and we'll push us close to $2 billion in assets probably the next month. We have 49 locations, soon to be 51 locations throughout Arkansas and Mississippi, primarily in the Arkansas and Mississippi Delta region and in South Arkansas. And our work really focuses on building economic opportunity. We really work to increase the net worth of people that we serve, be they very wealthy or be they poor. And of course, as CDFI, we focus on underserved markets. Now, when Governor Clinton, this is a long answer to your question, when Governor Clinton becomes President Clinton, he took his model of Southern Bancorp in Arkansas and Shore Bank in Chicago and created the CDFI fund at the Department of Treasury. And so now there are about 1,100 CDFIs across America working in underserved, hard to serve communities, really making a difference, creating economic opportunities, providing capital for consumers and for small businesses in those markets, working on affordable housing projects and other things to really create economic opportunity in places where far too exists. And so we're proud to really be the DNA of a type of banking that's having deep impact across America. And so that's quickly who we are in about 30 years of work.
That was a great summary. I'd be, from previous conversations about other topics, you seem to approach the market with an entrepreneur's mindset. Talk a little bit about that. Not every banker does that. but I know that that's part of your DNA. Talk a little bit about how you take an entrepreneur's mindset with all that you do.
Yeah, so Southern, because our focus is on serving underserved areas, and because we really are three entities in one. So I'm the CEO of the holding company that owns the bank. It's a regulated side of the office, kind of has state and federal regulation. Then we have Southern Bank of Community Partners, which is a nonprofit entity that also provides loans and financial development and education programs. But what we say quite often around Southern, no margin, no mission. So though we are deeply a mission-oriented institution, if we don't make money, if we're not profitable, then we're not going to be successful. And so in doing so, we are deeply entrepreneurial. We're looking for ways to have both very deep impact, but also provide a reasonable return for our shareholders that will allow us to continue to fulfill our mission. We don't exist just to be a bank. We really exist to make a difference, to what we say, build communities and change lives. And as such, we've been really looking closely at just bank innovation. And here's where Vance is just a true asset to Southern. We're probably unique. Most people now have some type of fintech applications that they use on their smartphone. And what you see is you see a number of entrepreneurial-minded fintech creators making these applications, then trying to marry that with a bank. And sometimes there's a real frustration between trying to marry, this high-tech fintech application with a bank that's probably operating on an IBM mainframe from the 1960s. And so that technology really doesn't always work as well as it seems like to you, the customer. And Vance can be very technical, but a term that I've stolen for him is that some of the kind of legacy core processors that claim to be entrepreneurial and also have this high tech pin to their core system. Some of that's held together by duct tape and twine. It doesn't work quite as well as you might think. But with Vance's help and just being an entrepreneur and banking in his DNA, we have jointly with Vance and with our holding company created a company that we call BankWorx, and we see an opportunity to have deep impact around serving the customers we want to serve, but also doing so in a profitable way. But more importantly, reaching scale and bringing back innovation back to banks. That's at the heart of entrepreneurialism, and that's innovation. We're there trying to solve customer problems, and we think we can do that better than most. And having this fintech and this bank working together, being in the same space, co-creating, we think allows us to be very entrepreneurial, to be problem solvers, but more importantly, to do so at scale and profitably. So, I think we truly believe in what we say, margin and mission, and we're going to get there by being entrepreneurial and reaching our customers.
Vance, that's a good segue. If you'd want to say a bit more about what you're doing and give us kind of the fintech spin on how it's a differentiator and kind of the big problems you're solving, that'd be great.
Yeah, happy to. I was kind of at this for probably 15 years or so in a more classic company. We tried to, back in about 2003, start a little family business to introduce the service back into the core systems business. Most people may not know that behind all of these banks is typically one big system that was written in the 1970s, 1980s, regardless of what your marketing spin is on it. That's where most of them come from. They're highly reliable, they have 40 years of technology baked in them. And while they will run a traditional bank, they're not great when it comes time to innovate and change. And so 4 big companies had kind of grown up, at least 15 years ago when we started, to have most of the market share. And what we found is those 4 big companies had pretty much lost the service level that banks like Southern needed. And actually, Dad called and said Southern was having trouble with a project, couldn't get the service they needed out of it was one of the big 4 vendors. And we all got together and said, hey, maybe we could start that again. In the back of my mind, I'm going, and maybe we could also reinvent banking when we do it. The mistake there was, though, that the business model of banking tends to pull you, no matter what kind of software you write, tends to pull you back into the same old system of demand deposit, savings, checks, batch operations, all the things that tend to slow us down. And so I woke up, 12, 13 years later, and we had basically built a competing system with a better service level and not really changed a lot, if we're honest. And so my sister runs that company now, does it better than I did, and they're growing, and as a classic data processor, I think a real bright spot on that market. But 2 or 3 years ago, I came to Southern, and Southern agreed that we all needed to put our heads together and really think critically about how these banks ought to be innovating. And that doesn't just mean bolting things onto checking account and savings accounts. It means really rethinking what a bank was. And so we set out late 2019 to ask that question. If you were going to build a bank from scratch and didn't know what a bank was, what would you build? Well, you certainly wouldn't build a checking account with an account number you share with the world, and balances kept in buckets and transactions posted at 8 o'clock at night. All of those things you wouldn't build. I know where they came from. And so we've been working for a couple of years to rebuild that back office system. You call it a core, I call it a set of cloud services. But we wanted to build, we call it System 61. And System 61 is a series of web services that at least our idea is we can deliver to banks, make them open enough where banks can then develop their own applications and focus then on real problems, not a one size fits all online banking tool, but an app for poultry farmers or an app for teachers or an app for nurses. And our pitch is, hey, if you want to survive the next big turn in banking, you better get good at something. And this is the way to do it. Build these vertical applications on a platform that allows for change and innovation. And so we're pretty proud of the platform. You're catching us at a time where we're really just kind of standing up what I call the bank. It's a department or a division of Southern Bancorp. And I think I got to echo what Darrin said. It is probably really unique to find a $2 billion bank that has built its own core system to innovate on, and is basically building a separate bank to go try and fail and try again and do it at a speed and at a cost that much more resembles the modern ways of building businesses than what legacy banks do. I'll stop there, but we're pretty excited. It's a lot of fun. And we are certainly, one of the things I have to say is we're certainly not throwing the baby out with the bathwater. That, I call it the classic bank, but it's that bank that pays our paychecks. It is the reason we can go think creatively about this innovation effort. And so big picture, it's a software system on one side, a separate one, and it's cloud, and we adopted a bunch of stuff from blockchains and cryptos that we studied. So it is, I'm not just throwing those words around. We can talk technically about any of it. And then it's also an innovation group, a new breed of people that are probably not traditional bankers. They're probably not used to walking in a bank. They're very comfortable with mobile phones. We call it Team WALT. Team WALT stands for Wealth Accumulation and Lifestyle Tech. And that team and that software is kind of the secret sauce of what we're working on.
Something I'd be curious to hear more about is, with the wealth of experience that both of y'all have, what are some of the challenges y'all face on an everyday basis?
Darrin, you're muted there.
It's the bane of our
Sorry
Zoom
about
existence,
that.
right?
I apologize. I was muting out the noise. I'll start with that question because I'm probably Vance's biggest challenge. Every day, though I did not grow up as a traditional banker, as alluded to my bio. I grew up actually suing banks and publicly traded companies. But I have operated in this area now since 2013, and then using the bank accounts since I was a kid, and so unfortunately, I think like the classic banker sometimes, and so I want to delve right back into kind of classic banking thinking, and that's really not where the world's going. And Vance he is absolutely right. I mean, if banks, if the traditional model doesn't change, we're ripe for disruption. I mean, I can remember a time where there was a Blockbuster Video on every corner, and now where's Blockbuster Video, right? And so that's kind of what we think about banking. If we don't change, if we don't become more agile, more nimble, more innovative, we will be the next Blockbuster Video. And so we are in many ways just a commodity, and you can pick and choose. So what makes us unique? One, we think our mission makes us unique, but also now we think that we can use this innovation to, as Vance says, innovate at scale and solve customer problems. There's something unique about having a fintech application that is dedicated directly for nurses or directly for teachers or directly for whatever segment of the population you're in. And everyone's kind of application they're using solves a problem for them, as opposed to having the classic bank account, which tries to be, one size fits all. And so I'm the challenge of having to go back and make Vance explain things 15 times and kind of get out of the habit of thinking of checking account and a savings account and a money market account. And we've built the first vertical called Wealthable, which we're pretty excited about. And it has no account. There's no checking account. There's no savings account. There's a portfolio. You're free to move your money in a lot of different ways. But even still, I default back to kind of classic banking thinking. And so I know that I'm his challenge for sure.
Well, it's not just him, but he hit the nail on the head. It is trying to think differently in an industry that is not capable of thinking differently. I mean, to give the bankers a little bit of credit, it is awfully hard to get up every day and run those banks. Those banks have, they've essentially got to balance billions of dollars to the penny every night, process hundreds of thousands of transactions, and not miss one. And at the same time, report to the government anything that's suspicious. I mean, go down the list, keep track of vaults of cash. I mean, the work they have to do is enormous. And so it's not real surprising that when we get in a meeting to innovate, they're not the ones we want in there because they're coming out of their day job and all these things running in their head, and just trying to get them to shut down and not think about what it is they've done for a decade is really, really hard. And a number one challenge for sure. You could go down the list of compliance and regulations and all that's tough. But we think the bigger one is, can we in this industry really think differently?
Yeah, I've got a question for both of you, and there's been obviously lots of attention in watching the growth of 12 or 1,500 different cryptocurrencies and the discussion around blockchain, the growth of Coinbase, and just all the activity around that. Do you see a scenario that you're marching toward could seamlessly, without having to go out to a Coinbase, say, yeah, I want to have cryptos and I want you guys to do that, and I want to be able to swap my money in and out of that and stuff that's maybe more liquid in whatever fiat currency is relevant, US dollars, I guess. Is that a direction you're headed?
Yeah, let me try that one. I have a little bit more, I've got a little bit of a cynical view on trading cryptos for value. In a lot of ways, you take Bitcoin, the value of the coin was never the important piece of it. What was important is the mechanics behind its blockchain, and especially when you get out into Ethereum and some of the others. And the coin was really nothing but the grease that made, or the gas that made the engine work. Mm-hmm. And instead, what's happened is there's all this attention on the shiny object that is the value of these tokens. And I think what we've decided is that there is some real genius in the way they put together those public ledgers. There's no question. But there are a whole bunch of them that are simply brilliant solutions in search of a problem. And so what we're trying to do is pick and choose the pieces of that brilliance that make sense. I'll give you an example. It shouldn't have been that hard, but when Bitcoin came along, the idea of a private key that is your wallet and a public key you share with the world is kind of a no-brainer. It makes lots of sense. But what do we do in banking? We take your private key, your account number, and we blast it out to everybody who wants it. We'll give it to anybody who wants it so they can bill us. Well, I mean, that's bizarre. That's not how you would build a bank. So there's an item we pulled from the cryptos and said, we can do that. So we abstract away the private key and the public keys, and we let you generate all of those you want. Those could be cards or account numbers or whatever. But I use that only as an example of learning from the cryptos. I think we're a little bit, banks and investment banks are really fairly separate still in this country. I think there's probably a time when we're going to get into helping as we help people build wealth. And that's kind of, Darrin keeps that in the front of my mind. It's savings, right? It's borrowing responsibly, it's spending right, and then it's also investing. And that's the piece that's probably coming later for us as a community bank. Is that fair, Darrin?
I think it's fair. I don't have much to add. I think that's exactly right.
And, I'd be interested to hear you both kind of speak on, just the impact of the pandemic. We're hopefully on the back end of this thing, but just the impact that it has had on the underserved communities that you do serve through Southern Bancorp, and how, perhaps through technology and innovation, we can narrow those gaps.
Yeah. So the first part of that question, the impact of the pandemic has had on the markets we serve, it's been a significant impact, tremendous impact. And in fact, in many ways, but for the government's assistance and now philanthropic assistance, the verdict is still out about how well some of the communities we serve will do. It appears that some may make it, but unfortunately, they're going to be a significant segment that just will never recover. So if you look at our portfolio at one time, in $1 billion portfolio, we had about 18% of our portfolio that was on some type of COVID deferred payment, whether that was interest only or complete, payment forgiveness for a period of time. Proud to say now that the vast majority, I think all but maybe $1 million or so, is back on regular payment. That was over $180 million. But what was probably maybe the most popular program of the pandemic was a Paycheck Protection Program, and that's where the government decided to interject through the banking system financial support to help small businesses keep their folks on the payroll. To keep them employed, so they could buy groceries, so they could pay rent, so they could, facilitate their lives. And what you saw by the government using the distribution channels of banking, you saw a great divide between the haves and have-nots, or the and underbanked, and those who have access to banking. So many people did not have access to a bank account. So if you think about it now, people of color and women are much less likely to get access to traditional capital and credit from a bank for a business loan. So many of those minority businesses and women-owned businesses don't have a relationship with a banker. And so if you use those bank channels to actually give out tax dollars or funding to support businesses, then they're left out. And so I'm proud that Southern was able to, along with a number of other groups, lobby and petition the administration and Congress that as you're issuing these paycheck protection dollars, let's make a carve out for CDFI banks, because we are specifically designed to serve underserved communities. So they actually did that in the last 2 rounds of funding, have made a carve out for CDFI banks, the minority depository institutions, and we've been able to serve that need. And really, but for us, some of those folks would not have had access. We did in the 2020 round of Paycheck Protection program, we did about 1,285 paycheck protection loans for about $112 million total. Over 90% of our small businesses that we serve had less than 25 employees. So and a large percentage had less than 10. So we touched some very, very small businesses. In the second round, where there's been some modifications to the program, we've done about, I think last I saw, about $60 million in paycheck protection funding for about 400 or so, about 450 loans. Again, some of the small businesses. But for us, many of those folks would not have had access. And we know that because we surveyed several of them with the help of an impact investing group, and they just were not, couldn't access them. I will say that, had we not had the experienced SBA lenders that are on our team, it would have been very, very difficult for us to do that. Unfortunately, the paycheck protection loan process was a very manual process, and it was a very time-consuming process. Hindsight 2020. Had we known the pandemic was coming down, we probably would have created a much better digital solution to make that work a lot easier. And so those are the kind of things we're thinking about, for the future, and that's why I'm really excited about S61 and the digital bank that we have here, because we can then spin up apps to reach those folks who are typically underserved. Because if you look at a lot of the studies from the FDIC and other groups about just the cell phone penetration rates in underserved markets, I mean, it's 60, 65, 70%. So many folks trust their cell phone more than they do going inside a bank branch. And so we think we'll be able to reach people through this technology that they're comfortable with and it's convenient for them, and help them on their financial building journey.
Yeah, the other thing that became real clear is we can run these banks without a bunch of branches. Now, we're going to go back to branches because there's still a lot of reasons to have them, but I think it accelerated in a lot of ways, at least my view of what we can do. If the name of the game is scaling impact for Darrin, then my job is to build systems that'll do that. And I think COVID may have accelerated at least everyone's vision of how that could happen.
It's kind of a follow-up question for both of you, and it's one of the things that I've heard discussed is part of this whole process of getting people comfortable either with the online platform or with traditional banking is there's an educational component to that. How do you incorporate that in to where it feels more approachable for people that are underbanked or unbanked? And maybe part of it is just because they have not had any exposure to it. They don't even know the right questions to ask necessarily in the beginning. What are you doing to engage them in education to bring them up to speed on how they can build value through having a good banking relationship?
Yeah, so I'll take a stab and give that over to Vance because he's probably got a much better technical answer than I have. But as we're building these solutions for people, and it's why it's important to build them with not bankers, as Vance said, but with these what we call mod squads, with people who are used to solving problems and actually including the people that we're trying to solve the problem for in the building of the solution. So we want them to help us build a solution that works for them. And so we know some things that are just true. And we use behavioral economics really to and try to infuse that in the products that we're designing. And so if it works correctly, it becomes intuitive for someone how to use the product. That's kind of the user experience. But it also provides that ease of education. Almost, for example, Wealthable, our first app, is kind of in many ways built on kind of the social media platform, and it's kind of gamifies it. And really, the first thing when you sign on to it, it's got a health score. When you do things that are positive, your health score goes up. Do things that are negative, it goes down. So we want to push people to do things. It's pretty easy to know I want my score to be high, and so you can figure out what you need to do to get your to raise that score. Over time, we hope that we may be able to make lending decisions based on your score, kind of as an alternative underwriting. And so it doesn't take that much education to know that when I do these things, my score goes up, and when I do these things, it goes down. So that it's kind of built into the behavior of the products that we're trying to build and create.
Yeah, I'll echo the user experience part. That's an art. Getting good at that so that they are intuitive is really, really important, and we're still trying on that. I think we've come a long way, but there's always work to do there. But it is amazing if you get engaged, and that's the key, is how you can engage folks to learn. We have an entire little theme. It's all based around air traffic control that has to do with Wealthable. So we send out the control tower will send out a challenge for the day, and your challenge is to open you a new expense vault. And maybe pay a bill from your utility company with it. And we'll walk you through that with videos, baby steps, right? And every week another one comes out. But Jeff, it's that sort of training. And then if you do it, your name may go in a pot and you may get an award for being the person that did it first or best. And if you can engage them on that level, especially if there's some rewards, and those are everything from kind of quasi points, miles sort of rewards you think about to the score he talks about, then our experience is you can actually educate them and then hopefully take the next step, which is teach what compound interest does for you in building wealth. I mean, that is a lost sort of concept on a lot of people, and the power of compound interest, both good and bad, is really, really important if you're going to teach wealth building. So we want to integrate that in those same sort of gamified communications, but it's hard work. There's not a lot of shortcuts, and you got to stay after it, or you cannot just hope they're going to pick it up. In most cases, it's a good question.
With how accomplished both of you are, would you say there's a sort of vision of what success looks like for both of y'all within the next, let's say, 3 to 5 years, or is it more of a fluid, gelatinous, I think of the lack of better terms, like not a chase, but just keep working every day to keep improving? Is there some sort of vision, or is it just an everyday, take a day by day sort of approach?
Yeah, so I think we clearly have a vision, and it's really around impact. We are a double bottom line company seeking to be a triple bottom line company. Think more and more about how the impact of our work has on the environment. We clearly think about a social impact and a financial impact. But I see this as a journey, not a destination. I think there are just a number of problems that people have, and unfortunately, just what you see in this country. You see the stats: 40% of Americans couldn't put their hand on $400 in an emergency without selling something or borrowing money. There's just so many ways for people to part with their money, and there's so many people after that. So there's a significant amount of education that we can do, and I don't think that I'm not sure that there's a destination. We talk in terms of impact. We talk in terms of customers reached. We have these big, hairy, audacious goals that are centered around things that have been proven to build net worth. So these are proxies for our success. And so we want to help people in obtaining and sustaining affordable housing. We want to help create and retain jobs, and we want to empower people to save and accumulate assets. And we've got numbers around that, but I can tell you, as we become more and more successful in reaching those numbers, and we've kind of got a 10-year framework on that set of goals. And as we've gotten better and better at reaching those goals, our board continues to push that goalpost on us. So where that number at one time was 100,000, now it's like 120,000. So they're stretching us and we're stretching ourselves. So it's really about the journey, not really about the destination.
Yeah, and it's a great question, because it's easy to kind of lose sight of the fact that this all has to economically make sense at some point. Yeah. So I think there's a short-term answer and a long-term answer on the tech side. We're going to try and fail a few times, and know that before long we've got to make sure this thing pays for itself and has the kind of impact that Darrin requires of us. But I think we're extremely lucky in the sense that we've partnered with a bank. And have the capital, quite honestly, to do that for a while. Now, I don't think we're a pure fintech, and I wouldn't dial you up and say, no idea how we're going to make money, worry about that later. I mean, we are highly focused on a new kind of bank that gets back to the basics of net interest margin and eliminating non-interest expense. I mean, we've got those models. But I think what I'd tell you is, in the short term, we've got the latitude to try and fail a few times before we hit on that high impact sort of offering.
Before we leave this idea of impact and whatnot, I'm gonna go into an area that might be a little bit politically charged, depending on your opinion of how well it's worked out. There was a lot of buzz around opportunity zones when those were rolled out in the last few years, and I personally chaired several events to try to explain them, and we'd bring in the CPAs and the lawyers to explain them. And at the end of that, I would have had an easier time understanding the nuances of quantum mechanics and how these opportunity zones work as it relates to a deferment of capital gains and whatnot. And so my question to you, and it's kind of a leading question, forgive me for that, is if we were to modify the opportunity zones so that there was a deferment of ordinary income, and anyone that could invest in these private companies, regardless of whether or not they were an SEC accredited investor, what impact do you think that would have on the regions and the groups that we were trying to impact by virtue of having the opportunity zones? Right now, they're just pretty much focused on real estate. And I think the vision was it'd be restaurants and barbershops and scalable businesses and everything else that the neighborhood needed in order to grow. I'd really be interested in your thoughts on that. And forgive me for an unfair question, but it's kind of a pet rock for me.
Yeah, I was just on a panel recently talking about opportunity zones, and quite honest, we just don't deal a lot with opportunity zones. Just in the markets we served, and some of them probably are even within an opportunity zone. It just hadn't been that attractive. And it hadn't stimulated the type of economic activity that really makes a difference. You know, at the end of the day, remember the opportunity zone legislation is a way for rich people to defer taxes. It's a claimed benefit is around economic development and serving underserved areas. But you know, at the end of the day, I've got to invest in safe way as possible to get my money back, and so I'm going to invest in the least underserved areas possible and the most likely business to succeed. And so what happens is a lot of these zones were drawn where, you know, around on the outskirts of a town or in an industrial park and places where they're probably going to see development anyway. So I don't think they've had the impact of really pushing development in places that really actually need development. I would say, unlike, for example, the new market tax credit program, I think you've seen a much better success with new market tax credit, and we're proud to be an allocatee of new markets. I'm not just saying that because that's the game we're in, but same with historic tax credits for some of the underserved markets we serve, the downtown communities. So at the end of the day, the legislation, being a former policymaker, making laws is not a purity thing, and a lot of things get thrown in to get it passed. I think that's an example of it may have missed the target that I think about it should have hit, but I won't call it, failed legislation, because I think there have been some positive things that have come from it, but it's really not had the impact on really underserved markets that we serve, like people thought, or I think like it was sold. it was going to have.
But the spirit of that question may be good. One of the things we believe, you look at just the decimation of small businesses in COVID, and we're working all the time with tech to try to figure out a way to build a feedback loop in a community where someone shops at the local restaurant, and that restaurant is also a customer of ours, and we can somehow enable them to get maybe a discount. To take an example of a coffee shop. Coffee shop, Southern's customer, and so is the individual. The coffee shop's business is a little slow today. They blast out a coupon that says anybody in the next 2 hours, and it goes out on the Southern Bancorp app, gets a so-and-so discount, and then all of a sudden you're actually almost doing a money creation right there in the community. And that velocity of money in a community is probably as important as anything. I know that's not quite what you're getting to, but we do believe in that theory that getting that investment local is really important.
Right. I mean, gentrification is a real thing, and when you limit the benefit to just that same group that's always going to invest regardless, you're not going to get the impact, because a lot of the investors that put money into opportunity zones now are not from anywhere around there.
Right.
It's completely opportunistic. So anyway, thank you for indulging me on one of my pet rocks about things that they need to change. I appreciate it.
And one of the, I guess, the last questions we typically ask as we begin to land the plane is we always invite our guests to take the opportunity to look back. Both of you have extensive experience and extensive backgrounds, to go back in time with the experience that you have gained to give your younger self advice, knowing what you would get into today. What advice might you give yourself?
Well, I've got to think longer back than Vance because I'm older. I'll let you go first, Vance.
You're not that much. I'm about to turn 50, and I'm becoming much more interested in the impact of my work. I hate to keep using that word, but whether it means something more than a paycheck, more than an equity upside. That's all cool stuff. But it truly is changing for me whether or not when I go to work, the results of that are building a company or building a system of machines and people that can go change people's lives. And that's probably what I'd tell my younger self is you're going to wind up there. Start a little earlier, because I did the rat race and lived in some big towns and tried the private equity deal. And boy, this is so much more rewarding. And I guess that's kind of what I'd say is it's not all about the money.
Yeah, I guess I would answer that this way. I have been so fortunate and blessed that there's not much I would do differently. I really come from kind of a unique background and kind of humble beginnings. I was adopted as an infant. I was 2 weeks old when my parents adopted me. And my dad was 55 when he adopted a 2-week-old. My mom was her late 40s. And I'm 50, soon will be 53. And my kids are 22 and 23. I couldn't imagine having, first of all, 2-week-old at 53, let alone 55. So once I hit the parent lottery. They're biological parents that I'm special because my parents chose me and their parents took what came out. And that really has influenced my life because both my parents are deceased now, but my dad was a minister, my mom a teacher first in the segregated schools of Conway County, Arkansas. And I lived a life and growing up where, my parents were so dedicated to being servant leaders. I mean, every day I saw my parents focused on helping other people. It was never about them. It was never about being wealthy. It was always about helping. And that really was instilled in me from an early age. So my interest in the law, my interest in politics, all came from this desire to serve. But this unique work that I get to do now at Southern, I may have come to this sooner, but quite honest, I came accidentally to this work. And it was really my wife that pushed me here because when Vance's father, who was chair of the board, invited me to be the CEO of Southern, I turned him down. I was pretty excited and happy with my law firm. I was the managing partner. We were doing well. And I convinced myself that we were fighting the big guy because I was suing the biggest companies in the world, for securities and consumer violations against little people, and we were very successful at it. But in my spare time, I was teaching a financial principles class at my church, and it was very rewarding. And I was amazed how many people that I grew up with who were much older, my parents' age or even a little younger, who had no knowledge of money. They just, as my friend John Hope Bryant says in his book, they just didn't get the memo on how to use money. And so when this job opportunity came around, I turned it down without even talking to my wife, and later talked to her about it. She said, well, that may have been the job that God gave you because you said you wanted to help people with money. I was like, well, I hadn't thought about it like that. So I rethought it and I joined, and I'm so happy that I have. But I've tried to live a life of purpose. But I really like this work because helping people improve their financial health really is powerful and rewarding at the same time. So I guess that's how I would answer that.
Amen.
Thanks for coming on. That was fantastic, and we don't want to leave without having the audience understand more about how they can get a hold of your organization. Is the best way to contact you to find out more. We've got people that listen from all over the place, and we think it'd be great if we leave them with what's the best way for them to get in touch with your organization so that they can learn more.
Yeah, sure. So you can reach us at banksouthern.com. We've got a full website that talks about our service. I would encourage you to go to our pages there and read about our work. And we've got some, what I would call, great customer testimonials to see the impact of the work that we do, and really proud to be a part of the organization.
Yeah. And we're not out trying to sell software business yet. We're going to partner with Southern for a while and prove things out. But our website, by the time this publishes, will be system61.com. That'll be a new website. And you can just go to the web and you can even find my number there.
Guys, this has been great. Thanks so much for coming on. A really engaging conversation. And I think, speaking for the Startup Junkies, we're really glad that you all do what you do. You're making a difference. Absolutely.
Thank you, guys.
We'll see you.
Thanks for the questions. We appreciate it.
Sure thing.
Bye.